Good evening, guys. Today's lecture, I'm going to analyze US30, one of the pairs that have been trading for some time. We've been trading this pair very profitably from last few weeks and few months. Technically, it's a very smooth pair. The price action is very smooth on this pair. The market structure remains trendy on this pair. It is an exotic pair in nature, meaning is that if your account balances are small, that I would not recommend trading this pair. If you're a new trader, then again, I would not suggest trading this pair. I would rather say that you should start with Euro USD or USD Yen or USD CAD to begin your journey as a trader and get a good grip on the technicals before you move on to the exotic pairs. Let's get started on this. A quick video on this. What I see, what I am expecting the price in a long term, and also what my expectation is as far as next week is concerned. Again, before I commence this, I would like to say this, that there are videos on the YouTube channel which are extremely helpful videos for all of you to watch. It's a good opportunity for all students to learn how to conduct a top-bottom analysis. In these videos, I've restricted myself up till the analysis, up till the daily charts. Very rare went on to H4, but that is the planning part of it. Normally, the way I've suggest and advise is begin your planning from the monthly, condense your trading plan on the weekly, further condense your trading plan on the daily, and finally on H4. The most important thing is when it comes to the trading plan is that you need to keep the momentum of relationship from leading from the monthly on to H4 carries on. It has to be condensed. It cannot be a different or its individual trading plan on a particular time frame. It has to be condensed beginning from monthly, weekly, daily, H4, and for execution, of course, you can do execution on M30, M15, M5, and M1 time frame. So before wasting any time, let's get started on this. US30 pair. Monthly chart in front of you guys. Bullish price action on this pair. You clearly see price is in a bullish market structure. That's where the price is at the moment. That's the highest high low. And now the price is in accumulation on a higher high formation. That's where the price is. And you can see the accumulation has started. Now, price is sitting on a higher high formation. Now, in a normal market structure, if the price is at the higher high formation, then you would be expecting the price to retrace for presumably a higher low formation. And as we know, all these retracement can be to 23.6, 38.2, 61.8, 88, and 78.6 retracements. Now, before any retracement begin, price has to break this weekly level. So price has to break 2316 to confirm any kind of retracement. It has to break this, and the first low high will be your selling opportunity in the retracement. And that retracement can carry on to these levels. Yet the price will make on the monthly another higher low, as you can see, and can carry on. Now, this is an extreme circumstance. I'm trying to explain you the relationship between weekly and monthly market structures, and I have a very precise and unique way of explaining relationships between weekly and daily H4, and carry on the story and chemistry between them. But again, for this specific analysis, try and understand if that retracement begins, if I'm expecting that retracement, but for that retracement to begin, when can I say, okay, the retracement had started, will start, let's say. Price has to break this weekly level. That is the key factor. If it doesn't, then price can carry on ranging further higher. That's what I see. Price retraces to 23.6. You can clearly see price can go further higher. That's what my analysis and expectation is. If the price breaks this, then I'm expecting a deeper retracement, hopefully to 1972 or this weekly zone. That is my ultimate target, guys. If the price breaks this, I'm expecting retracement, possible retracement to these levels. Now, that is the long-term analysis. Now, what do I'm expecting right now? If the price holds here, fails to break this, that I'm expecting the price to test these levels, 2316. Now, I have been trading precisely like this for the last few months. As you can see, and you can clearly see there. So again, this is the third time a triple top formation. Price is testing the resistance area. We need to see if the price breaks this, or if the price rejects it, then I'm expecting the price to retrace. Again, it's not always the case that the price will retrace all the way to these levels. Price can retrace to these levels and then carry on. Remember, we are in a bullish market structure, bullish price action. Now, triple top formation here. How do I read this price action? What I discuss is a long-term price action, long-term analysis. Now, possibilities again, of course. Let's try and understand and devise a trading plan for next week or the week after. This is the month. Today is the 18th, so I'm expecting the price. If the price closes, if this candle closes below this candlestick, then and if this monthly candle closes below the prior month's candlestick, then I'm expecting the price to go down. It means the sellers have taken control. Then I will be expecting the price to have some sort of bearish movement on this. Previously, as you can see, the price engulfed this. My expectation was this. It went all the way to test these levels. So that's something I'm obviously observing on the monthly charts. Most of the students believe that monthly charts are important, but let me say this: this is where the thing begins, and you can go within to see the development phase of it, how the price develops. So let's focus on this further. So guys, if the price is on the triple top formation here at the moment, as long price fails to break this area, my trading plan is the price will go down. That's what my expectation is. If the price breaks this, then of course, bearish trading plan invalidates. Now guys, your trading plan invalidates, for instance, it doesn't matter. It's perfectly fine. Circumstances changes, your trading plan has to be the correct and technical reading of the price action at the time of conducting your analysis. That's what really matters. So let's move on to the weekly charts. Here we are on the weekly chart, triple top formation, as you can clearly see. 1, 2, 3, and well, my expectation is if the price rejects here, I'm expecting the price to come down. That's my next target is if the price. That's what overall target is of the price. If once price breaks this, then we're expecting a decline on this. That's what our weekly expectation is. Same analysis as monthly. I'm expecting the price to go to the downside as long price remains below 2680 levels. Now, last week, let's try and understand the trading plan for next week. Last week, you had these rejections, huge rejection at the moving average on this major daily demand level. The prior week, you still had rejections, but again, this candle has engulfed the prior 4 weeks of candlesticks. So the sellers were in control. Therefore, last week, our expectation was that the price will go from 2600 to 2544 levels. That's what our expectation was, as you can see, and you can clearly see that's what our expectation was. Price from 2624 and expecting the price as 25, nearly 20 levels and exactly how the price came all the way to test 2525. Successful analysis on this. Now, how do I'm reading this price action for next week. Let's consider this. My trading plan is to sell. That's my overall intention for this move. But because of these rejections, my expectation is that price will test, retrace, do a little bit of retracement. That retracement can very well be to these levels, anywhere these levels. Retracement. Look for a low high formation and selling with the trend. That's what my trading plan is. So price can retrace. Once the price is in the zone, price can retrace. Look for low high formation and selling towards a low formation. That's what the trading plan is. That's a earlier high. Now, the second scenario is, what if the price doesn't retraces? Then what? The price will break this zone, retraces, forms a low high formation there. Look for selling opportunities. That's the two cases here of possibilities as far as the price action is concerned. Because of this price action, my expectation is, as long price holds above 2536 and retraces a little, look for retracement to the upside first before the price forms a low high formation and go further to the downside. Let's have a look on the daily. There we are on the daily charts. So the first case scenario, how I'm approaching next week. Next week, market opens. Let's say I will be waiting for price to retrace a little, forms a higher low formation. And I will be looking for that first move, which is a counter trend trade. That's my first expectation. We've been buying this from last Thursday. We've been buying this from last Thursday, and you can clearly see the reason is exactly the same. And we had a very successful analysis on this. Now, that's what the first trading plan is. That is a counter trend trade. Guys, if you're a new trader, you don't always have to take counter trend trades. You can trade with the trend first. With the trend, what I mean is the main moves first to gain confidence. But again, it's a clear opportunity if it's presented in this zone. If the price retraces to this area, look for buyers to enter, forms a high-low formation and take advantage. Now you have specific rules for high-low formations. Again, use your strategy, the ones you're following to establish those rules and to take advantage. What very specific rules for high-low formations on this. Now, that's the first case scenario. So that is the first trading opportunity. We might have a buying opportunity. That's what my expectation is. Seeing from the momentum on the candlesticks from the weekly, those wicks, I'm expecting the price to retrace a little. If it gives in high-low formation, look for buying opportunity. And that buying opportunity can be very well for these 65 units here. Now, what is the second trading plan? Now, this was a counter trend trading plan. Now I'll talk about, let's say you've traded this, or you don't want to trade this. You just want to take a sell trade because seeing the price is rejecting from the monthly levels, that is the main trade. The main trade for me is a sell trade, of course. But this is a counter trend opportunity. If it presented, why not? Now, sell trade. What's the trading plan? Price will retrace, goes higher, or price goes higher in this. I will be looking for selling opportunities there. 61.8 Fibonacci's, you can clearly see, and significant confluence falling exactly on the supply level there. Price can retrace further to this zone, further retracement, which is normal price action, very normal behavior of the prices. Go almost try to make a double top formation. That's your selling opportunities. I will be looking for selling opportunities on this, and you can clearly see the confluence here. 61.8 exactly falls on the target level. as far as the demand is concerned. This is the main trading plan. That's my main trading plan, to look for selling opportunities on this low high formations, low high. Price establishes low high, take advantage. You should have very precise rules for this based on the strategies that you guys are following. Great trading pair. I can see a great confluence here as far as the price action is concerned. You can see an agreement amongst Fibonacci's, supply and demand levels, and of course the price action itself. That's what the trading plan is. Now, last case scenario is this. Let's say the price never retraces. Price never retraces. So then what? If the price never retraces, so price comes back and just reach this level, then we will be looking for selling opportunities on the pullback for the price to form a low high formation. This can be a possibility. This is also a possibility, guys. But remember, seeing the price action from the weekly candlestick, I will be expecting some kind of retracement, hoping that the retracement will be at least to 61.8 Fibonacci, which is at 2616. If it forms, that is an ideal case scenario, guys. Price retraces, rejects there, goes down, or any further retracement is perfectly fine as far as the trading plan is concerned. It gives you a good reward against risk, and that's really matters. Very interesting pair, great trading opportunities are present on this. Look to trade this pair. Again, use this analysis which I've conducted in line with your trading strategies, the way you are trading, and try and understand how I'm trying to establish this top bottom analysis by establishing using rationality with it. Now, what my expectation is, that's my favorite direction is price will retrace first. If it forms a higher low formation, I will be looking for buying opportunities first to these levels. That's my first trading plan, counter trend trading plan. Second is price never retraces. I will let the price go into these zones, 61, 78. Look for higher low formation, lower high formation, selling to the downside. That's my second trading plan, is in case there is no retracement. Finally, guys, the last case scenario is price retraces and breaks this area, which is a daily supply level. Then I'm waiting for the price to retrace back, forms a low high formation, looking for selling opportunities. So breaks this area, came back, makes a low high formation. This is my least favored trading plan. I am more in favor and anticipating and expecting the price to retrace first and goes higher. In case there isn't any retracement, of course, guys, and you didn't able to catch any retracement move to the upside, for instance, focus on the main move, which is the sell trade here. Take advantage of this at the low high formation. Now, great trading opportunities on this pair. It's a good trading pair to trade. Trade this pair. Use this analysis in line with your trading strategies and take advantage of this. I will be back with more analysis as I see more trading opportunities during the week. Hope you enjoyed the session, guys. Thank you very much.